welcome to Billionaire. So this video is on Nifty analysis. We'll check in depth what is happening in Nifty, positionally what is the view, and what is the view for the next week as well. So first of all, very happy Holi to you all. So yesterday the markets were closed. We had recorded our last video on 16th, and yeah, so 3 days vacation. Hope you enjoyed with your friends and family. So on 16th, our view was like there were two views, bearish and bullish wave views. So out of which bullish view seemed to have worked. So you can watch that video from the link above if you want to understand what we discussed and how it went. So you can click that link and watch that video. So here a couple of things. The purpose of this video is to try to find out the potential tops and bottom of the market, right? So that thing can help you to decide your financial investments, right? So what if you can find out these potential bottoms and tops, how you can find them? So for that, we are using a particular method. You are already aware of that. We are using Elliott Wave, which can help us to find out the potential tops and bottoms of the market. So we are also following, like I'm also following Elliott Waves. I use indicators, I use price action as well. There are other methods, but like you cannot use them to forecast the market moves. So that's why we are using Elliott Waves, right? So that is the main thing of this Elliott Wave theory. It uses Fibonacci to find the potential targets, and it has wave principles, which has its own rules and guidelines, and they are extensively followed for the stock markets. So the Elliott Wave theory was invented in 1930 by Ralph Nelson Elliott. So as per his rules and guidelines, the market follows certain patterns and they repeat over time, and it is based on crowd psychology. So whatever collectively people think, that gets printed on the charts, and we have to find that pattern. So once you find that pattern, you are well aware that how much it can go up or how many waves will be there. These things you can find out with the Elliott Wave theory. So that's all about Elliott Wave theory. Okay, so we are not going to go in detail and discuss each and every aspect of the Elliott Wave theory. So so this is the Elliott Wave. You can type Elliott Wave patterns. So these are the total patterns that you see on my screen. You can watch, like you can type Elliott Wave and come to the images section on the web. Okay, and then you will find this pattern. So out of these patterns, we are going to discuss just this pattern. Okay, so this is called as triple complex correction. Okay, or 333 correction. So this pattern, and apart from that, these are all other correction patterns. There are correction patterns, a lot of correction patterns, out of which we are going to discuss just one pattern. So as you know, the markets moves in 5 waves up and then 3 waves down. So whatever it goes in 5 waves, they are represented by numbers. So 1, 2, 3, 4, 5. So up moves or a dominant move is represented by numbers, and corrective move is represented by letters A, B, C. So here it can form a simple zigzag correction, or this is a complex 333 correction. Okay, so this is what we are going to discuss next. So on my screen, you can see that this is Nifty's chart, by the way. So here you see that market is in correction since long time. So let me show you from this particular day of 20th October 2021, it's in the correction mode. So markets are in a correction mode since that day, right? So from 18,600, we made 16,400 low, then again 18,300, then again 15,671 low. So you might be wondering, it's Nifty had not fell a lot, but a lot of shares in the Nifty 50 or Nifty 500, they have made 52-week low, right? All of them, many of them are down 50-60%. Some of them are in a consolidation. So will you be able to identify them with other methods? I don't think so. I have not come across any other methods which can tell you that. So here, as I said, market is in long consolidation. this is called as consolidation because it took Nifty to come down to 15,671, 96 bars. Okay, almost 140 days it is in a correction mode. So this is called as market correction. So corrections are good opportunities to accumulate good shares. So that's what our main intention for this video is, to identify that this is not a major correction. It took 140 days to come downside. Only how much? So let's check how much it has come down. So it has come down just 16%, right? So it has come down almost 16%, not even 16%, right? So that is not called as major correction. This is called as correction. What is crash? This is not a crash, right? So this current movement is not a crash. This is not a crash. This is crash. COVID fall was a big crash. Even 2008 fall was a big crash. So the markets fell down almost by 40%, 40 odd percent during this move, right? So this was the move where it fell down very sharply. Again, during 2008 crisis, it fell down a lot, right? So that is called as crash. So that is not happening right now. Okay, but yeah, so the correction represents the complex patterns. So corrections have the complex patterns. So smaller fall will be always counted as a smaller correction. So that will give you the opportunity to accumulate shares for the longer term. So we are going to see now what is happening in this area and how we are going to find out, we are going to find out whether it is going to go up breaking this high or whether it is going to do another round of correction. So we discussed the 333 pattern. So first let's understand with the price action that Nifty here, when you plot a channel, is a trading in a channel. So this is the channel it has traded. So if you followed the price action, you would definitely think here that it has broken the channel and it is supposed to go down more. You would initiate bearish bets here, but it made an engulfing candle here, bullish engulfing candle, and it has went up almost 1,000 points. So how much it has recovered, that we want to see. If you want to see that, we have recovered around 10%. Okay, so yeah, that's 10.6%. We have recovered from the bottom. So as I said, this is not a correction and it is consolidation, you could say. So consolidation, you see a complex correction in the consolidation, and 333 is a kind of complex correction. You can call it as a 333 as well. Okay, so this one move, second move, and then 3 move. Okay, here this is called as a connecting wave. So this is first correction and this is second correction. So this can be a double complex correction, and then it can break this high as well. So unless this is not broken, you cannot say for sure that it is not going to consolidate more. Okay, so that's our main idea. Is another clue here is MACD had made a fresh low along with the price. So MACD has made a fresh low. So price is also making low, MACD is also making low. On the daily chart, you see that there is a fresh low. So we cannot say that this is a bullish and it is going to break on the upside. What I'm expecting is it is to make one more low on the MACD. It will make this kind of low and the price will go like this. It will drop, it will make smaller low or even bigger low, but then it will shoot. So that is what I'm expecting as per the Elliott Wave Theory. And this is where I'm saying that this is a triple complex correction. Okay, so the triple complex correction we'll see here. So this is the triple complex correction. This is the example of triple complex correction. Triple complex correction is a combination of multiple corrections. So there are a lot of correction patterns. So when you combine them, you get a triple complex correction. So first W, then X connecting wave, then second correction, then X again connecting wave, and then Z correction. So this is the first, this is the second, and this is the third. So hence the name 333 correction. Okay, so you remember this pattern just for this video. There are a lot of other like patterns in the Elliott wave. I'm not going to cover them in this video because it will become very much long. So let's move on and see. So let's see this move from the top of what is that top? Okay, where is the 1 hour chart? Days. So here on the daily chart, when you see from first let's understand this move. Okay, let's check this move. So I have chart here. So here as well, you can see that the triple complex correction has played its role. So this we were able to identify somewhere around this. We had a view that based on MACD and Elliott Wave itself, we had a view that it is going to go down towards 16,400. So from 18,600 when it was dropping in the channel, we thought that it is going to go down more. So this is the video which explains that. Okay, so let me zoom it out. So here around, what is this date? This date is, let me zoom out. So on 23rd November 2021, we identified that based on Elliott Wave pattern that we are going to go down more, right? So here you can see that 17,400 was the level and we were expecting it to drop towards 16,700. So that's the same thing has happened. So from these levels, we dropped with another round of correction towards, I think 16,400 was the low it has made. So 16,400 low it has made at that position. So this is how we found out the complex correction, triple complex correction. So this complex correction is seen on the lower degree. So now again, we are expecting this complete wave as a W. So this will be W, this will be X, this will be Y, and there will be an X correction, and then it will drop on the downside, creating a Z correction. So that's how we are discussing this. So the pattern I want to show you is like this. Where is that pattern? Yeah, this is the pattern that I'm expecting on the larger time frame of daily chart. So I have plotted another channel considering these 3 points. So then I'm getting this area. So somewhere near 17,800, we could make top as X wave and then drop on the downside. That is what I'm expecting as a triple complex correction. I can go wrong as well. There's no doubt about it. So this is not an investment advice. This is just an educational video. I can go wrong as well sometimes. Okay, another time where we were able to identify that is somewhere near this level. So somewhere around these levels, we were able to identify that it is going to go downside towards 15,700. Isn't that amazing that you are able to forecast it way ahead, that it is going down towards these levels? So let's check that video as well. So this is the video which we recorded on 7th Feb 2022. And after that, we mentioned here that it is going towards 16,200 first and then towards 15,700. And the same thing has happened, right? So you can watch that video as well from the link above. The link is going to pop up here. You can watch that video. So this is how we are able to forecast the markets move based on Elliott Wave Theory. So so when I want to show you as well that we are able to forecast these moves as well. After it made a top near 18,300. So that top we were able to identify. Here the top we were able to identify. Then we identified the drop. So here again, bottom also we were able to identify with the ending diagonal pattern, but we didn't held for long. We should have held after looking at ending diagonal pattern at the bottom. We should have held for the upside. Yeah, but around this point onwards, I made a good, I bought some shares which I wanted to buy. I got some levels, good levels. So that's how I invested, and those stocks are, some of them are in a good returns. So moving on to the next, what we are assuming here is, regardless of news or regardless of market movement, the market news, Russia-Ukraine war was a major event. Still, the crude oil went to $130. Still, we didn't drop very heavily, and we recovered again 10%. So that is the one thing that tells us that we can use this model to forecast the price, and we should know that the market is in consolidation. It is not in deep correction. So somewhere around 15,300, that is what I'm expecting a low, and then it should go on the upside. So yeah, if I want to show you this chart, it's available here, right? So this was the move. It has given as a ABC wave. So as I said, corrections are represented with the letters, and the impulse waves are represented by the numbers. So this is how we fell down. And now let's check the next move, current move of the market. So how markets are moving in this area. So when we check that, okay, when we check that, here is the chart with me. It's hung. Okay, so here we are seeing again a triple complex correction, ABC, W. So the pattern is repeating. That's what I want to say. ABC, Y. Then here again we are expecting correction because this is channel top, internal channel top, and then a Z wave could come on the upside, taking us towards 17,500 to 800 levels. Okay, so in the next session, what I'm expecting is a correction. So let's find out this move again in detail, how the chart looks. So this is the chart that it shows us again ABC correction of Y wave. Here we are looking at ending diagonal pattern. So here again we want Nifty to drop towards these levels, 17,150 to 17,050 odd levels. So it should drop towards 0.38 to Fibonacci. It should not be a deep correction. That is what I'm expecting towards lower end of the channel. If it breaks the channel, we can assume that the fall has started. So this level break, 16,550 will be confirmation of the fall. Okay, moving on to the next. Here I see that this is a leading diagonal pattern, 1 2 3 4 5. So tomorrow it can open flat or a gap up. Okay, around somewhere around this level. If it open gap up, what we have to do is we have to wait for 17,330 to 320 levels. Then we can use this as a stop loss and ride for the downside. So this will be an aggressive trade. We are taking a trade before it happens, right? So this is a very risky trade. So another thing that we can expect is if it opens flat or a gap down below these levels also, then we have to assume that we have to wait. Actually, if it opens gap down, it should break this level, then that will be a confirmation for the fall. As I said, if it opens gap up, it goes like this, then this will be an aggressive trade entry somewhere near this level, keeping this as a stop loss, and we can take a safe entry once it breaks the B level, then that will be a confirmation for the fall. So that's what I'm expecting as per the Elliott Wave Theory. So hope you understand what I'm expecting right now. There is a bit of consolidation after this fall towards 17,050. We could drop, like we could go up to 17,500 to 800 levels, and after that we are expecting a drop. So the drop confirmation will be break of this channel. So it should break this channel, then we can consider that. So whatever, if it makes a low here somewhere and then bounces back, then it should break that level to give the confirmation and break the channel as well, right? So that will give us the confirmation for the fall start. So then once it makes the top, we will be able to create the next targets on the downside. So until that, I'm not assuming any targets based on these levels, because it can go up as well, and this analysis can go wrong as well, right? So that is the probability, most probable scenario that I'm considering as per the Elliott Wave Theory. So hope you like the analysis. If you have any doubts, ask in the comments. Thank you. Have a great day. Bye-bye.